Of course, this was slap bang in the middle of expectations given in your trading update of a 25 to 30% increase. So really strong growth. So you do say you remain cautious on the outlook for the recovery in consumer spending, but it looks like you really have been benefiting from consumer spending over the past year.
Morning, thank you. Yes, well, the results are driven in particular, I think, by the Clicks chain, and the Clicks stores did very well. And I think there are a number of reasons for that. Clicks is a value brand. You pay less at Clicks. We have the club card, and we signed up our 3 millionth club card customer during the year. And we've also been rolling out our pharmacies, so we opened our 250th pharmacy during the year. And the health and beauty markets have been some of the most resilient during the recession in any event. And so it's really Clicks that's driven this performance, and we're very pleased with it.
So your first impression on those numbers out of Clicks?
Well, yeah, as you said earlier, Clicks issued a trading update, so the numbers are exactly in line with what was expected. So there are no real surprises. I've had a quick look at it. Pretty much what we anticipated has in fact occurred. So there's nothing really to say about that.
Well, David, you said it was really driven by the performance from Clicks. How about some of the other divisions within the group, such as Musica, though? Because that had really been a bit of a weak spot in previous years.
Well, look, Musica's... Sorry.
So go ahead.
Oh, sorry. Musica is operating in the toughest markets. The entertainment markets are discretionary spending. So turnover for the year was flat. But I think with good margin management, good expense control, we maintained profits for the year. So, and we've also held shares. So we're pleased with Musica's performance, and things will get better as the economy recovers.
Of course, we were chatting to Graham Leadbeater a short while ago. I think you walked in at the end of that discussion, Sid. And he was really talking about the pharmacy model that Clicks has set up, where you have the in-store dispensary, and that's really getting feet through the doors. How do you think that's helped to catapult Clicks to where it is at the moment?
Well, it's the Clicks brand delivered turnover growth of 16.7%. If you strip out and we look at the intercompany turnover, which in theory is the quantum of pharmacy product going from UPD into Clicks, if you strip that out, then the Clicks brand delivered turnover growth of 13.6. So 3% roughly of Clicks' turnover growth came from pharmacy. And then, of course, no doubt, as the customer came into the store, we're speaking about foot traffic, the foot traffic is enticed to purchase something else in the store. What you also want to look at in this context of the 13.6 is how does that compare with food retailers? Now, you saw the Pick n Pay numbers yesterday, and from our calculations, if you strip out the impact of the huge growth in franchise, the underlying corporate stores, like-for-like turnover growth, my rough calculation is less than 1.5%, more like 1.25%. In other words, consumers were not buying more food product, even though they may have had more income. They didn't take the money and spend it on more food product. But clearly from these numbers, the consumers came into the Clicks stores and spent more money on units, if you strip out the inflation, buying products in Clicks stores. Some of it could have been impulse buying because they came into the store to buy pharmacy, to buy drugs and what have you, but clearly they bought other products as well. Maybe we should ask David, to what extent, or is it possible for them to have worked out, to what extent did the consumer trade up? In other words, instead of buying Lux toilet soap, he decided he can now afford Pears toilet soap because he's got more money? Or did he just buy a bigger basket of the same kind of merchandise?
David, do you have an answer for that?
Yes, Sid. The answer is largely about the basket. We don't see any signs of consumers trading up. If anything, I think there's been marginal trading down. So, for example, we've had a very good year with Clicks' own brand products. So Clicks' own brands are now 23% of front shop sales. So consumers are still looking for value. But certainly we've had good volume growth. Volume is up by 7%. So the big message is that really consumers still want to look good.
Of course, your ultimate aim is to have a dispensary in every Clicks store. How's that going, David?
Well, as I said, we've opened our 250th. That's out of 373 stores, so we've still got around 120 stores still to put it in. In the medium term, the goal is to expand the Clicks chain to 500 stores with a pharmacy in every store. But we're now pretty clearly the market leader in retail pharmacy. We've signed up almost 2 million customers to our pharmacy database, and we're doing more than 1.5 million prescriptions a month.
To what extent are you facing competition from food retailers in this market? Because I know if you walk into Hyperama now, you're likely to see a dispensary in a Hyperama, and that's obviously owned by ShopRite and Checkers. Are you seeing competition from them?
Yes, we are. I think ShopRite have around 100 pharmacies now. I think that's good news for consumers because they've got more choice, and it keeps us on top of our game in terms of what we offer customers.
Would you go along with that? A bit of a good news for consumers, but a tougher competition for companies like Clicks, Sid?
Well, you know, David talks of tougher competition. Obviously, more stores and more competitors does mean more competition. At the end of the day, it may well boil down to price. And I'm assuming, David, am I right in saying that it's Clicks' policy, stated policy, that you will not increase your GPs on drug products until such time as you've attained a certain market share? Versus that, you know, compared to that, we must now examine what the competitors may do. ShopRite said in their presentation that they welcomed the proposed increased margins because they plan to take advantage of it. That obviously is going to create a differential in pricing where MediRite, which is the ShopRite brand, may turn out to be more expensive than Clicks, which of course is wonderful for competition because it gives customers, it simply, from a Clicks perspective, it highlights the Clicks lower price proposition versus a higher price proposition from other pharmacies.
David, are we going to keep that lower price proposition from Clicks, or are you going to increase those margins?
No, I emphasise that the Clicks brand proposition is you pay less at Clicks, and we intend to carry on delivering that. So we do welcome the proposed dispensing fee regulation because I think it brings clarity to the profession going forward, and that's important because the pharmacy profession is part of the primary healthcare system in South Africa, and for that reason alone it's terrifically important. But as far as Clicks is concerned, we will maintain you pay less at Clicks.
David, perhaps just take us through the performances of UPD and Body Shop also over the course of the past year.
Yeah, sure. Look, UPD maintained its market share. It's South Africa's biggest pharmaceutical wholesaler and distributor, so it's got a market share of around 24%. Sales grew by 12% on the wholesale side of the business during the course of the year. Profits were a bit down, but in line with the expectations that we previously had because the drug price increase was much lower this year than it had been in last year. As far as the Body Shop was concerned, the Body Shop operates at the upper end of the beauty market, but we still saw unit growth there of over 5% during the course of the year. And I think that's because the Body Shop's message of ecologically friendly products is spot on for the times.
Just maybe a quick one. I mean, you said in the commentary that you remain cautious on the outlook for consumer spending or the recovery in consumer spending. Yesterday we had Nick Badminton, the CEO of Pick n Pay, saying we need another interest rate cut. What's your view on that? Do you think another interest rate cut would help to boost that consumer spending and get more feet through Clicks' doors?
Personally, I think that it's actually about job creation. The consumer confidence will grow when they see more jobs being created in this country. That's the key to confidence.